Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, it's turning out to be a session where we are seeing some amount of profit booking on the screen now. So we have the Nifty, which is down around 52 odd points. We have the mid-cap index, which is underperforming. So down around 0.5% currently for the mid-cap index, with an advanced decline ratio, which has turned in favor of the declining stocks. So 1,881 stocks advancing to around 2,100 stocks declining on the Bombay Stock Exchange. Lot of queries, lot of stocks in focus, so that continues to be our 30-minute focus on the show. We have Rajat Bose joining in on the technicals and Astha Jain joining in on the fundamentals to answer all of your queries that you have. Rajat as well as Astha, welcome to the show. Well, Rajat, before we go ahead in terms of the queries, the hygiene check question in terms of the technicals of the market, it's a weak session. We have the mid-caps, which are a little lower, advanced decline ratio negative. But how would you approach today? Just as a day of routine profit booking, or maybe buy on dips can be adopted?
I would say buy on dips can be adopted for the simple reason is that the dips happen, but then buying comes back once again. And for a particular point to remember while going while doing buy on dips, that is the 9-day exponential moving average, which is currently at 21,991, very close to the 22,000 mark. Unless the index falls below that on sustainable basis, there is no even short-term threat. It bounces back the very next day or something. And the one thing I would like to mention out here, this kind of humongous bull run, and that continues ever and ever again, it is happening because every month you are getting huge SIP and pension money put together. This is more than 30,000 crore a month. In fact, last month, I think the figure was something around 34,000 crore or something. If this is the kind of buying that is happening, even if FII sells big way, it doesn't depress the market for very long. So buy on dips would be a good thing. But only thing that is problematic is the valuation. Valuation of PSUs are out of whack totally, and lots of other stocks are also very highly valued, richly valued. So you have to apply your discretion and continue to buy or hold on to your stocks. And there is no threat as such to the uptrend as of now.
Okay, all right. No threat to the uptrend as of now. And your point is taken in terms of the kind of flows that we are seeing when it comes to SIPs every month. But let's get in some queries now. We have Shashidhar, who writes to us from Bangalore, holds 200 shares of ITC, which is bought at an average price of 407 odd rupees. So he's just about breaking even on that. He's a long-term investor and wants to know what to do, whether he should hold for more than 5 years. He wants to know whether this is the best bet for the future. Well, at one point, Astha, nobody really trusted whether ITC would come through in terms of a stock performance, but then it did see that breakout from last year onwards. 5 years onwards, do you think that it would be a portfolio bet? Just stick your bets in ITC and lock up the shares and forget about it?
Yes, hi, good afternoon. So talking about ITC, I think from 5-year perspective, definitely it's a good stock to hold in the portfolio. First of all, want to give the target, not for 5 years, but at the initial level, we can expect the targets to be at around 440, 450 levels, provided if the coming results will be good enough to give the support for the further momentum. But as of now, 440 can be kept as a target. So if I talk about this counter, although we have seen that their cigarette business was, in the results which they have posted, the cigarette business was not that strong. But if I talk about their other business, all of them has posted strong numbers, and we are expecting their FMCG and other business to continue to post strong numbers on the back of increase in the consumption demand. So I think going ahead also, we are expecting this counter to show good results. So I think it's a better bet to keep the stock in the portfolio for the initial targets of 440, 450.
Okay, all right. 440, 450 are the initial targets on ITC. Rajat, what's your call for ITC as a bet?
Well, ITC, unless it takes out, say, 418, 422 on the upside, it is not going to show much of an upwardly movement. On the other hand, it needs to fall sustainably below 386 to become further weak. Otherwise, it would be a range-bound scenario. Only thing is that there are distribution signs and the stock has already come down. So if it were to fall below 386, then I would say that you wait for some time before you buy into it for the long term. One good thing would be that you buy some here, and if it falls, then you buy, and if it goes up, also you can buy. And if your horizon is 5 years, then definitely you can get into this stock, because over a period of 5 years, generally ITC would give you some appreciation. But as of now, crossing 480 to 500, whenever that move happens on the upside, you should be expecting a lot of selling happening around those levels, because looking at Hindustan Lever and its market cap and looking at ITC and its market cap, I would say ITC is stretched around 480, 500. So you should keep that in mind.
Okay, all right. That point should be taken and kept in mind in terms of the stretch that we've seen for ITC on the technicals. Let's get in another query now. Vidya Shankar writes to us from Chennai, holds 400 shares of GMDC, which is bought at 150, so sitting on a great profit there since the past 18 months, and is a long-term investor, wants to know whether to hold or sell. Well, this one, Rajat, has given great returns. It's rallied all the way from levels of around 120, close to the buy price for Vidya Shankar, all the way to over levels of 400. So very good returns. Do you think that maybe it could be prudent to just take some profits off the table, or would you suggest holding on?
Very briefly put, if I were in his shoes, I would definitely have booked my profits. Even at current prices, I would suggest booking profits. You would get it at lower levels to re-enter if you want to, because in about, say, 12 months or so, it has actually quadrupled. This kind of vertical rises are followed by long phases of consolidation when you will not see much of appreciation. So it would be better if you book profits here.
Okay, and what about you, Astha? What's your view, considering that, you know, it is a mining company? There have been some triggers which have taken place, such as receiving environmental clearance for capacity expansion recently for one of their lignite mines. So in that sense, how would you approach it fundamentally?
Yes, that lignite mine is basically Surkha, and the capacity expansion is from 3 MTPA to 5 MTPA. So, I mean, this will help the company in showing the strong revenue growth going ahead. So, there are the two parts to my answer. First of all, because the investor is in the huge profit right now, so even I advise to book partial profit. And the reason being is that whatever results they have posted in the quarter gone by, the results were not that strong. So, it's better to book partial profit, because share prices has already shown a strong momentum. The second part is going ahead what. So if I talk about the future outlook of this stock, definitely it is one of the leading mining public sector enterprises now, as they have got the environmental clearance. So the Surkha lignite will definitely help in increasing the capacity, which will in turn the drive which will in turn, increase their revenues going forward. So I think looking after both the parts, book partial profit as of now, and hold some of the quantity for the price target of 430 to 448, the initial level.
Okay, all right. Well, that's on GMDC. That stock has given very good returns. But let's get in another query now. We have Shrikant, who writes to us from New Delhi. He holds 130 shares of Nestle, which he's bought at around 2,625 odd rupees. So he's sitting on a bit of a loss at this point. And 134 shares of Tata Technology, which he's bought at 1,200 odd rupees. He wants to know what to do, whether he should hold or sell both of these stocks. So both of them sitting on a loss. Loss is bigger for Nestle. But what would you recommend on both of them? Astha, you go first.
Yeah, for Nestle, I think the losses are there, but it's better to wait on this counter for the price target of 2750 to 2800. Talking about this counter, they have a strong 3-year capex plan, which will in turn help the company in showing a strong future performance. Although whatever results they have shown in the quarter gone by, the results were up to the mark. So I think on the basis of their cost rationalization strategy, improving mix, etc., the company will definitely be able to show a strong financial performance going ahead. So my stance is better to wait in the stock and continue the holding with the price target of 2750 to 2800. Talking about Tata Technologies, I think again this is counter is also a hold from my side. Although price target which I'm giving right now is 1250 to 1300. Talking about this counter, the results were okay because on the bottom line they have shown the decent performance of 15% growth. But talking about the margins have shown a strong, upside because it was EBITDA margin was 16%, and now they have shown 18% in the quarter gone by. So I think the margins have shown certain sort of improvement. That is the helping company in showing strong future performance. Along with that, in this quarter, they have signed various good deals also. So again, one deal of $50 million and in the automotive space, and another deal of $25 million in the aerospace. So I think all these will help the company in showing strong future performance going ahead also. A hold from my side, price target can be set at 1250 to 1300 at the initial levels.
Okay, all right. And Rajat, would you have a view on both of these counters, Nestle as well as Tata Tech, technically?
Technically, I would say that first a disclosure from my side. I have recommended Nestle to my clients to purchase. I mean, they are short-term traders, mind you, but for a long-term investor, definitely it's a hold. And unless it falls below 2400, there is no short-term trade either. And in the short term, the 9-day exponential moving average and the 50-day exponential moving average, we see a bullish crossover there. So in the short run, it is going to move up. And over a period of time, Nestle has been maintaining its strong uptrend, so it is likely to continue. And regarding Tata Technologies, I would say that it is one stock you should not be looking at short term, because this is an ER&D company, engineering R&D company, and the kind of softwares that these people produce, they are not just IT services companies. They are there with the client company for years in some cases. So if you can wait for 4 to 5 years, you will get real good returns from this. And from a technical point of view, short-term uptrend, short-term downtrend has been that has been reversed, and the stock is going to move up. Once it goes above 1200, you will see some more traction. And over a period of next 6 months, I see Tata Technologies might hit 1300 to about 1325.
Okay, all right, Rajat as well as Astha. On that note, we need to take a quick break. We'll answer more of your queries on the other side. Stay tuned. Welcome back. Well, some amount of profit booking which is now seeping into the market. So the mid-cap index is now seeing a tumble. It's down around 0.7%. Nothing to write home about in terms of a huge loss. But if you see it on an intraday basis, there's been a sudden drop which has taken place just in the past couple of minutes. So down around 0.7% currently for the mid-cap index. The BSE small-cap index should also come up for you. And let's see how that particular index is performing. As you can see, the Nifty 50 is down around 0.3%. But remember that we're sitting on all-time highs for the markets. So maybe this kind of reversal in a day which has largely been consolidatory shouldn't really ruffle any feathers. The BSE small cap index, as we speak, is down around 0.4% as of now. The advanced decline ratio, like we've been pointing out, has turned in favor of the declining stocks. So that is continuing to widen, and that gap should come up for you to give you an indication in terms of how exactly the breadth of the market is doing. But we still have with us Rajat Bose and Astha Jain to answer all of your stock queries. Let's get in another question now. Deepak writes to us from New Delhi. He holds 120 shares of Ramkrishna Forgings, which he's bought at 220 odd rupees. He wants to know whether to book profits or to stay invested. Well, sitting on a great profit there, so it's always tough to, take profits when you're already sitting on such hefty gains. What would you recommend, Rajat, on this one? Do you think it's prudent to maybe book some gains?
Yeah, I would concur with your opinion. That is, it would be better to actually book some profits because it has been trying to take out the 800 mark since December, and it has not been able to do so. On the other hand, we see some distribution signs. But here I would say take part profits. And once it falls below 700, then you should exit the position because in that case, it could test 625, 600 kind of levels. You can re-enter if you want to, or you can switch to some of the things. But this distribution sign definitely warrants some profit.
Okay, all right, fair enough. And Astha, what would your view be on the fundamentals?
Fundamental looks good about this company because they have a strong footing. Their presence is in the North America, South America, Europe, and now their focus is on increasing the revenue from the EV side of the business. Although they are into the forgings also, one of the leading metal forging company in the India, and in fact in the forging segment also they are increasing the capacity. So future outlook looks strong for this company. So my idea is if there is no hurry to book the profit, then one can remain invested. Price target can be set at rupees 800 to 810 at the current levels.
Okay, all right, fair enough. That's on Ramkrishna Forgings. Well, maybe a little bit of what we are seeing for our markets is also because the European markets have opened with a little bit of weakness. Remember that the US markets were lower overnight and we had Asia, which was largely sluggish. So maybe there is some amount of trepidation post the European markets trading. But nonetheless, let's get another query now. We have Shrisha, who writes to us from Pune, holds 300 shares of Newland Labs, which is bought at 5,000 odd rupees, and wants to know what the future prospects of this particular investment would be. Sitting on a bit of a profit, or actually a significant profit on this one. Newland Labs has been a complete rank outperformer, Rajat, in terms of the technicals. What would your recommendation be?
See, regarding Newland Lab, I would say that it's on a tear. It is going up and maintaining. See, it is always getting supported by the 9-day exponential moving average. And on the other hand, when it is getting some resistance, that is around the upper 20-day EMA Bollinger Band. So the Bollinger Band +2 standard deviation is giving some resistance, and while the 9-day exponential moving average is continuously supporting it on its way up. This is a stock you should continue to hold. I wouldn't say that you get out of this just because the prices have moved up. No profit taking is needed out here. At least when the trend is so strong, why should you book profits?
Okay, all right. And a quick fundamental take on this one, Astha?
Yes, the trend is strong because the results were exceptional. Around 100% rise in the bottom line is what they have posted, and their transition from a CMS business to GDS, from the API business to CMS and GDS specialties as well as GDS Prime is really helping the company in showing strong performance, and that is what we have seen. The numbers were also great. So I think yes, the stock is poised for more returns from the here, and that's why we are recommending hold on this counter. Initial price target can be 7,400 to 7,500.
Okay, all right. Astha as well as Rajat, thanks very much for joining in and taking us through all of those queries. That's all the time that we have on the show. Do remember to email us all of your questions. We'll address them with our experts. Closing bell up next.